How's everyone doing today? Great. Wonderful. It's been quite a while since I've been able to stand in front of you and do this, so it's very exciting that you came and very excited for us to have you here. It's been 17 months, I think, since we've been able to host a meeting, and a lot has obviously changed outside in that regard, but also Gentian.
No. So we're looking for feedback.
Yeah. So obviously the new building's been completed. Our outdoor space has been completed. I know some of you have been able to come in for some outside meetings, which we're very excited to do. We have beautiful days like this. When we saw you in February of 2020, there were 9 of us on the team. There are 12 of us now. You probably have not had a chance to meet Jenny, who joined our marketing team, Ryan, who's on our planning team, and probably not Angie. She started about 2 weeks after that, who's on our plant operations team. So if you have a chance today, say hi, welcome them. So today, we're going to cover a little bit of the Gentian update. We're going to touch on questions we're hearing from you and other clients. We'll go into a market update, talk about market corrections, and then we'll talk about planning opportunities and some tax updates that we're hearing about. Chris and Ken just spent 2 days in May studying with Ed Slott, who's the foremost tax advisor for retirement plans. So they got a lot of takeaways from that, which will be helpful. Chris has strategic coach this coming Friday. Zach just had that in May. The entire team participated in the Raymond James Virtual National Conference for Professional Development in May. This week, a few of us are participating in a 3-day virtual Raymond James Tech Conference to see how we can better utilize their technology platforms to serve you. So there's been a lot of exciting learning opportunities for the entire team. Important dates. If you have not signed up yet and you're interested, the next Women in Gentian event is Thursday, June 24th. So it's next week. I believe it's a painting event. So it'll be a lot of fun. As a reminder, if you want to go back and watch this, any of our bi-weekly updates, or any other webinar that we've done, they will all be posted to our YouTube channel. You can find them by either subscribing to that link or going to our gentianfinancial.com website. There are links there to that as well. You may notice in front of you, there's a little black box. That's a QR code. So the way that works is if you just open up the camera on your phone and point it at that, you will get, I can't see it, there's a little box that pops up asking if you want to open a web browser. It will take you to a follow-up survey for today's forum about what do we do well, where can we improve. So afterwards, if you'll take just a minute to scan that, take the survey, please do that. We'll also be walking around to help you out with that if you need any assistance, but it would be very helpful for us for future events if you could do that. There we go. So today you'll be hearing from more than just me. Obviously, Chris, Ken, and Zach will come up on the stage, but as always, the reason I didn't put just his picture up, because Chris will be the first person to tell you that any award that comes into Gentian is not just him, it's not just the team, it's the trust that you and all of our clients place in us. Since we saw you last, Chris has been named to the 2021 Raymond James Chairman's Council, which means he's in the top 1% of all advisors in the nation. There's about 4,700. He's been named to the Financial Times top 400 advisors for the 2nd year in a row. He's been named a Forbes Best in State Wealth Advisor for the 3rd straight year. And he was named to the Barron's top 1,200 advisors list in 2020. So a lot of exciting things that, again, Chris gets the accolades, but it's really our entire team's hard work and everything that you guys do for us. So give yourselves a round of applause. And yep, that's all for me. So join me in welcoming Chris, Ken, and Zach.
Well, that's the introduction today, anyway. I'm not quite sure what to do with my hands. So that was hello.
Oh, hello, there we are. So that was the unplanned portion of the presentation, but it was kind of fun. So after the year and a half that we've had, I haven't been on stage for you probably, other than on TV or COVID. So this is real, just, you know, this isn't Zoom. I can see real time your facial reactions. I enjoy it. I love this part. So thank you for coming out today. Thank you for sharing your time. I think coming back here is really what's interesting, is seeing each of you face to face, seeing you guys and being able to talk to you, seeing real time feedback it's great. Now, I want to bring something up here. I'm going to go big in just a moment here, but if you look at this, what's interesting about COVID for myself is how selfish I became.
So if I look at my time and the microphone not working, it's interesting. I think maybe the other microphone might be better. Hello. Maybe not. Maybe no microphone is working at all. Yep, there's no microphone working. So you guys can figure that piece out while I talk. Is that working? Yeah. Okay. Hold on.
It's not working now. Is it?
So I don't know how it works when I'm not talking into it.
But I think the thing for myself in COVID anyway is the fact that I became very selfish with my time, meaning that you didn't really have to do anything. You could go home and guess what? It's your time, right? Nobody called you to do anything. You didn't necessarily go out. And what's interesting though is our team really stayed together. We were far enough apart. We were able to stay together in the building. But what I noticed about people asking me to do things now, like after hours, well, that seems preposterous. No, I've got my own stuff to do. Well, what is it? I used to say yes to everything. So it did help me decide what was important, what's not. I don't need to go to every Bucks game. I don't need to see all the baseball games. I don't need to see the Chinooks games. I don't need to do all the yes before, but it's really about what's important now. So I think that's a big thing as we focus on a go-forward basis. A lot of what we're going to do here as well is going to be on what's important to you too. And I think that's probably the biggest takeaway is what we're doing with ourselves and our family. So for us beginning here, I always like to go big. So why don't you take a moment, maybe have a piece of paper or something to write on. If not, just put it in your mind. But let's think about going big. Let's begin in gratitude. I'll start right away without giving you any time. My gratitude is seeing you face to face. My gratitude is you being here. My gratitude is being able to travel with my family. People being able to take vacations and consider travel again. These are the things that my gratitude has really been showing to me. So take a moment, write down for yourself. What are you grateful for? What are some of the ideas that you might do on a go-forward basis? And I'll stop talking here for probably 2 minutes, which will seem like 30 seconds. And go ahead and take a chance to write those down.
That's the sound of seconds ticking away. And checking that the microphone's working.
It's kind of funny. I feel like a rock star here. There's a whole row of people walking in front of me. All right, so let me have it. Anybody here wanted to share what they're grateful for? Yes, go Keith. Keith Patterson. How are you, sir?
I am well.
Good.
Just this morning, I checked the state of Wisconsin's COVID information site, and I discovered that there has not been a new infection in Waukesha County since May 27th. So we're grateful for that.
Wow, what's this COVID thing you're talking about? So, as I used to do, and I saved a lot over the past year and a half, is I'm going to give you $100 grand for your participation. Thank you, Zach, for handing up. Thank you, Keith. Anyone else? Please, yes.
Despite the ups and downs, the whiplash and the luge ride of the last 18 months, there was this feeling of security knowing that you guys are watching out for your finances.
Oh, thank you very much. I appreciate that.
Can we give Keith? There we go.
He gets 200 for that.
Yeah. You might get 400 for planting the question. You recited it perfectly. No, I appreciate that. Thank you very much. Ken, Mr. Wilt.
How are you, sir?
I'm great. How are you?
Great. I want to thank you for Saturday. It was perfect. Absolutely perfect.
Thank you.
Mostly thankful for how our family came together to watch over Mom and I. Make sure that we weren't running around when we weren't supposed to be. Locking us down. Going to get groceries and all that sort of thing.
Absolutely.
It was a pain, but they were appreciated.
That's awesome. I think what we found in this, a lot of people noticed, is the care that the neighborhood came back out to and the family circle came back. It really showed a lot of good in people. So I thought, despite all the stuff the news media says, it's actually really, really cool to see what's occurred with the family as well. What Ken's talking about last Sunday, we hosted Jazz Fest here down at Fireman's Park. It was a wonderful time. The nice thing about a Jazz Fest is it's not so loud that you can't talk. This makes sense? And it was beautiful music, 3 different distinct artists. It was fun. So next year, feel free. It's a great Sunday afternoon. We loved it. It was a great community event. We want to continue with that as well. So you'll see a lot of those different events coming up as well. Anyone else? Gratitude, please. Yes, Dave, girl.
I'm grateful for my daughter, Keelan, whose birthday is today. And she introduced me to Chris maybe 20 years ago.
Oh, yeah, 25 almost.
25 almost. Yeah.
Yes.
Her birthday is today.
Well, we're going to sing happy birthday to Keelan. Matter of fact, we're going to sing right now. No, I'm just kidding. Keelan may not be watching, but I've known Keelan in time. Actually, it was his daughter, one of the first friends we had here playing volleyball. When we moved to Milwaukee, she's fantastic. She's now down in St. Louis. And her daughter, his granddaughter, goes to college this week, right?
Saturday.
It's Saturday.
She's there.
But she's a recruit. She was actually recruited as a freshman or sophomore to go to University of Missouri to play volleyball, so she'll be a setter there. So it's kind of funny when my friends' kids are now being recruited to play volleyball. You're like, what? She's going to run a team? She is. She's great at it. Thank you, David. That's awesome as well. Yes. Grateful to have grandchildren over for a sleepover. That's awesome. It is fun to hear the stories. So this weekend we were in Omaha. So I'm grateful for this as well. We get to see all of our family. My brother-in-law was almost in tears that his entire family came to his son's wedding from all over the nation. It was great. It was the first time we'd be able to do it. We had it out on a farm, this really cool area that was out in the open. It was an old farm converted to both a chapel and also a reception hall. Super, super cool. And we really, really enjoyed getting together again. And just the pure appreciation of being in the presence of your family is a great thing as well, because we haven't really done that for a year and a half as well. So it really brought appreciation to the forefront. Thank you very much, sir. I appreciate that. Anyone else? How about Zach? How about Zach?
For those of you that watched it as well last night, I'm extremely grateful for the Milwaukee Bucks to practice emotional resilience. That was one of the toughest games I've ever seen in my life. But in all seriousness, just extremely grateful to see you guys here today, and also for our team. It's a lot of work to put in the time to do this and get everything set up, and they did a wonderful job. So extremely grateful for you guys being here and for our team here today as well.
Awesome. Thank you, Zach. Okay.
Yeah, absolutely. Maybe.
Good morning. Hey, there it is. Okay, all right. So grateful. I mean, I hugged and shook hands with 4 or 5 or 6 of you when you walked in. So that's what I'm grateful for, is that feeling of hugs again, handshakes. That's really a nice thing, isn't it? So I also am grateful for clients that share things with us. I think it's a really important thing. I want to acknowledge someone here today, Bruce and Heidi. They got engaged recently, and they allowed me to say that today. So I want to say, if everyone can put their hands together for Bruce and Heidi. We got engaged, and congratulations. You guys make a wonderful couple. So
thank you. Well, I appreciate it. So there's an awful lot to be grateful for, but I think the interesting thing as we go forward here is that I want to begin with the questions we're hearing from you. There's so much to go through, it's not even funny. We've done these bi-weekly updates. We started last year when COVID began, it was weekly, then we did bi-weekly. And now there's about 4 people listening outside of our staff, which is great. But we figure it's summer, it is what it is, we record it, and at least 5 people will watch it afterward as well. So those are both good things. I'm joking with that. There's 10 people watch it. But everybody enjoys knowing it's there and can watch it or listen to it anytime. So we decided to make this an institution. Every 2 weeks, we're going to give you what's going on, kind of what are we thinking, what's happening. So our team does a lot of research. We get a lot of, for instance, Ken and I spent 2 days with basically pounding through tax law that would put you to sleep within the first 15 minutes. And I got to say, I got 2 bruises. One on my head here when my head hit the desk and I fell asleep, and then I had another one on my chin. So it was kind of a rough one. No, it was really, really good and riveting for us. But we bring back to you what's important. And there's a lot of potential tax law changes going on. So my question to you is: anybody here interested in those tax law changes? Good. Ken will go through every single one of them. So just so you know, that'll be good. And if you don't know, we'll ask Michelle Gross sitting in the back as well, because she probably knows most of it as well. But the nice thing about it, we've got these partners, we've got a lot of centers of influence, and several are sitting in the back too. And the nice thing for us is we rely on them very heavily. Every month we have a COI call. What in your industry should we be looking at for you? And it rounds out what we do. And from health insurance to estate planning to tax planning, there's all sorts of, we've even got real estate agents, we've got recruiters. We want to know what's going on. And I'll tell you what, on a call about 4 weeks ago, I had everybody raise their hand. Everybody told about what was happening in their industry. I had everybody. So just give me an arrow. Point to me which way you think the economy is going to go in the next 2 years. After they all reported, and guess what? Everyone said. And why was that? Because everybody is at peak demand. Now, what I want to do is I want to be the person that started the "we're hiring" sign business, because that's the most difficult thing to find right now, is the signs for "we're hiring." In a McDonald's bag, I did go there, I bought my daughter some French fries. We got the bag. Inside the bag was on one side a flyer for McDonald's, the other side was an application. You know it gets tough when McDonald's is putting applications out in their bag of fries. But at any rate, it's just interesting to see some of these different pieces of the economy and get different perspective as we go along. So some of the questions that we're hearing from you is, should I be worried about inflation? Well, should I invest in cryptocurrency? What the hell is cryptocurrency? That's 2 people left. We put enough stuff out about it now. But if you go through, should I be buying individual stocks? Is the market too high? What should I be doing with my cash? And a lot of them, you're finding reasons to spend it now because you can travel, which has been a big part. But when should my kids come to see you, and can I afford to retire? So for some of you, we've got different stages of people here as well. But these plus many others are coming up now. So these are the things we want to address today. Are there any questions that we haven't put up here that you're interested in? Anybody want to blurt out something they're interested in that is not up here? We can cover it as well. They're here? What was it? Nobody? Okay, good. So how about, we'll go through these. And the microphone will go in and out, so I'll just speak really loud. So this one apparently is going to be wavering. After a year and a half of not using it, it doesn't seem to want to work. Batteries, it could be, but the light's on, so it's not necessarily batteries either. I think it's the system here at the River Club. It's great. So I'll tell them about that piece as well. They'll get it running. They'll get it up and running. So with that, I'm going to kind of run into this. The core is inflation. Anybody heard of inflation recently? Anybody here over the age of 40 who's lived through inflation?
Oh, yeah.
Yes, yes. So can anybody blurt out the highest interest rate they paid for their mortgage? 16%. Oh my gosh, why would you do that? I'm just joking. Because you had to buy a house, right? As you go through. Anybody else? Anybody have a great savings rate they can remember? Yeah, Keith.
11.5%.
11.5. I remember my wife, my father-in-law said to me that at one point on the high yield savings account he was getting for her savings was 11.2%. Think about that. Sounds awesome, right? Except the net return on it was -3. Because the price of everything went up 14%. So she felt good about losing 3%. Who here feels good about losing money? No, we don't either. But here's the difference. The silent enemy we have called inflation is not something that you see. So people feel good about this. Oh, that's okay, I don't lose money. But over time, it takes away what it is you have.
So Chris, yeah, that's a good point here, and I don't think my microphone's working either, but, so let's do a real life example of this is as money fades away with inflation. So I was gonna put this down because it does. No, it's okay. So I'm just gonna keep going like this. Can you guys hear me any better now? Does it work? Can you hear me? Yeah. These microphones are really awesome. So what I need is I need two willing participants that you have $1 in your purse or $1 in your wallet, okay? So does anybody want to participate? That you have $1?
Steve said yes, I saw it.
So Steve, come on up on the side here. We'll keep our distances if that's what we need to do. Yeah, absolutely. So I need one more person. That has $1 in their wallet or $1 in their purse. Come on up.
Sharing in that.
Okay, so come on up. All right. So we look at inflation. We talk about cash. We talk about stocks. We talk about those sort of things, right? So the first example is going to be Steve. Now he has cash on him, money markets, savings, checking, things of that nature. Those who are holding a little too much cash, right? We all need some sort of cash. We really do. But if you're holding too much cash, this is what can happen. So the Federal Reserve basically came out and said, hey, look, $1 today is going to be worth 80 cents 4 or 5 years from now. That's what they basically said in English, right? So when I say, hey, okay, Steve, give me your $1, and he's holding cash, now in return, I am going to give him 80 cents. Is that a good deal? For you? And I'm the bank, right? I'm the bank. Now, Byron here has stocks in his portfolio, much like all of you do as well. So with proper stocks in the portfolio, you give me $1, okay? And in turn, probably should have had it ready, but in turn, I give you 3 back. Now, not a bad deal, right? Not a bad deal. Now that's $3 if you work with Chris. I would give him $5 if I'm your main advisor. No. We manage the money the same across the board. But anyways, that's the difference between holding cash versus having the proper amount of stocks in your portfolio, because historically, stocks have held up with inflation. They really have. Now we're going to see this time around if there is inflation. Some say it's transitory, some say it's here. We don't know, but we're keeping a keen eye on it. But that's the example of real life as far as inflation versus cash, and then stocks as well. So you guys can keep, Steve, you can keep it if you want. There you go. No, I'm just joking around. Thank you guys for participating. I appreciate it. Thank you. You go, Byron. You get $2 back, Steve? I made $1 on that deal. I don't know how that worked, but that's pretty good. Anybody else want to volunteer?
Yeah. He can make a huge return on your money with that. So CPI and inflation again. We were very fortunate about getting to spend an hour with Dr. Jeremy Siegel. Has anybody ever heard Jeremy Siegel? No, 3 people. Okay, so Dr. Jeremy Siegel is essentially, I listened to about 5 or 6 people, Brian Westbury and Nick Murray. Anyway, Brian Westbury, the different economists we listen to, because they're typically giving weather forecasts, I'm very careful with them. But you'll find that Jeremy Siegel wrote a book called Stocks for the Long Run years ago. And reading that book was a seminal incident. What it basically says is if we can be predominantly stocks our entire life, you're going to have the retirement that you can live on, not only just live on, but prosper on. But you're going to have to make it through steep ups and downs. And to many of you sitting here, I've seen you've been with us and you've been through the steep ups and downs. What's interesting as well is though, he was talking about what's just happened. We're going to talk a little bit about M1 money supply. We're going to talk a little bit about a lot of the statistics he had. But one of the biggest ones is inflation over the next 4 years being 5% per year. So what Ken just showed you is what's going to happen. 80 cents on the dollar is what we're going to have 5 years from now approximately with inflation. Now there's some other issues and things going on in deflationary technologies, but this is what we're seeing on a go-forward basis for inflation. You've all been through it. You've all seen high energy prices, 12 and 13% inflation. You've seen food and CPI. The 50-year average for core CPI is 3.8%. Just about 4. That's the core long-term CPI. When you look at this as well, forecast right now for what I call headline CPI, 3.8 50-year average. January 2021, it was 1.4. February, it was 1.7. Guess what happened last month? 5.1. Oh my gosh, what's going on? The news media blows it up. Now let me ask you a question. Who here thinks inflation is good? And then there's no right or wrong answer. Well, there kind of is, but I don't want to bait you into it. Anybody here think that inflation is good or bad? It can be good, right? Because what is it? It's excess demand. Let me give you a sample. Has anybody here done any home repairs? Anybody here looked at the price of a sheet of plywood? That's right. You go there and find it. Oh my gosh, how much is paint? Why is paint so expensive? Client was just telling me he does underground contracting. He said the pipe that he uses was $3.80 per linear foot. Now it's $8.95. And while you go to the store, it could be higher once you step in there. So the price can change immediately. So, but inflation is this, there's more demand than there is product out there. So we started a just-in-time economy years ago. Just-in-time economy says what? We're going to deliver it just when you need it, except during periods of excess demand. Then I got to talk to the head of Huawei. It's the biggest electronics maker in the world. And Joy Tan and I have developed a friendship, so we talk about once a month. So I asked her the question, so Joy, what's going on with semiconductors? We can't get them. She goes, well, Chris, just-in-time demand, just-in-time delivery is, we've got a certain band that we produce. And the trouble is, if you request 2 to 3 times that, we don't have them. We don't have the capacity to make them. Hence, Ford and Chevy and all the truck dealers have all those trucks sitting there yet to be delivered. I drove by 2 car lots recently thinking, did they go out of business? You know what it is? They can't get the new vehicles because they're not ready. So when you look at inflation, it's about too much demand. And too much demand, if you look at laws of supply and demand, too much demand raises prices up. Now, historically, what you're going to find, Jeremy Siegel says that stocks are the only category to beat inflation significantly. Matter of fact, bonds will probably have a negative 1% return over the next 10 years or so due to inflation. When you're looking at stocks, about a 4.7% return. Historically, that's 6.7 above inflation, but because of inflation, it's going to be a little bit less over the next 10 years. So some things he says, the bull market in bonds is over. It's been 40 years and it's over, okay? The average individual should be considering taking a little bit less on their income. Now, to many of you, we've talked about this, but instead of people rationing up to 5 or 6%, which some people do, they're going to be heavily at risk. We're talking more about a 4, let's call it 3.5 if you're younger. But those are the kind of things you could do to be preventative during this time. Now, why is this important? We seek to give you long-term perspectives that are going to make you prosper during your retirement. So Jeremy Siegel gives us this kind of data. There's 25 points, and I can go through all of them if you'd like at nauseum. No, I see it immediately, Gene. No, thank you. No, thank you. Because you know I will, and you know I can't, right? Because I've done it. When I first started doing appointments years ago, I used to try to justify, oh my gosh, look at all this stuff. And I go through this data, and I get to the end, and I go, is that important to you? Not really. So thank you for your honesty on that as well. But there's a bunch of cool stuff that comes from Jeremy and all the different people we get to meet. We're fortunate. We get to circulate with some incredible groups, and we do it for your benefit. I'm always thinking, how can this benefit you? How can this benefit your longevity, your lifestyle? Remember, we're Gentian. You've seen a new slogan for us too. It's Gentian's Retirement. Plan it, live it, and give it. Because all of you have been in this stage. You're either in the planning stage, you're now living retirement, or you have more than you need and you're beginning to give it. We have a 4th stage as well. It's called inherit it. I didn't anticipate it as much, but a lot of you are inheriting money from your parents or relatives. So there's really things we want to be prepared for. There's a ton more, but those are really 3 or 4 major items. So as we go through, you've heard a lot of the forums we put on are for how can we live better? How can we live healthier? How can we live more prosperous? How can we live happier, right? So this is a big part of what it is we want to do here at Gentian for you. So it won't always be financial, but we know today is about finance. So we do want to run through some of these different pieces on finance in the different slides that we have as well. Inflation, where it is and isn't.
Yeah, where is inflation? You know, this is a pretty good one. Gasoline obviously way up, right? I mean, as we know from a year ago, I mean, it's up 50 to 60% in some cases. Used vehicles, all that demand for new vehicles has pushed the prices of used vehicles up even more. You know, some of you may lease a vehicle. I mean, we're getting calls right now as far as the leasing goes, right? To say, hey, do you want to trade your car back in because we want to sell that one, right? So used vehicle, transportation, of course, apparel. But down here, it's interesting. College tuition has basically stayed flat, you know, according to this study by, I think it's by Yahoo. Medical care, you know, that's kind of stayed flat. Still high though. I mean, I think everyone would agree that medical expenses are still high. But it's really interesting to see. You know, food is up at 2.1 right now. New vehicles, it's a microchip issue. some of you who ordered vehicles, you can't get them till October, November of this year. It's a microchip issue right now because of the huge demand going on right now. So that's where inflation is and isn't right now. That was a nice little rundown of where it is. So, question I have here: has anybody here tried to sell their used car lately? Yeah. So let me ask Peter. He can yell the answer because we have to. We have no microphones. However, what occurred?
We got a lot of money for it.
See?
They drove to our house and picked it up.
Those are understandable. Anybody here heard of Carvana? So I saw a Carvana car being picked up, delivered, and I'm like, oh my gosh, you can buy it in your house. They'll pick up your old one and deliver your new one directly to you. You know what the answer is? Yes. Guess how many car salesmen you have to deal with? None. That's no fun. I like the guy who walks out, hey, what you looking at there? Well, it's a freaking car, first of all.
That's who we used. You put your car's information in on their website. They give you a dollar amount that they're willing to pay for it. You send them a picture of the odometer, the exterior of the vehicle. They come, pick up your vehicle. The next day, that money's in your bank account. To the dime of what they told you.
Absolutely. That's amazing. What Peter did, he decided to get the money in the bank account, not deliver the car. So he's got both. No, I'm just joking. He did not. But you can see now, so what's deflationary? Anybody here want to throw up what might be deflationary? How about IT processors? The fact that the speed of the world is going quantum. Now, it's hard to remember what quantum is, but remember I've been talking about this for years at the Tech Forum. The speed is going quantum, but the cost is reducing. So you're seeing something wildly deflationary happening in our environment as well. It's represented, I think, as Ken said at the bottom here, IT and hardware services, but there's even something. Quantum computing power is driving the processing power for data and information and calculations to a negative, to a deflationary environment. So it can be argued that you're going to find that a lot of what's occurred has actually been a deflationary environment that we're in, because the most important thing we've been using in our economy, and the thing that could put us all out of business, is going to be information technology and artificial intelligence. So a lot of that's been going on as well. Cryptocurrency, anybody heard of it? Yep, good. Anybody? I was going to ask the question. Anybody own it? I've got some right here in my pocket. I was going to show you guys. You can't own cryptocurrency in your pocket. There is no Bitcoin. I did hear that some gentleman in a poor neighborhood was walking around in his trunk and selling people in the neighborhood Bitcoin. He'd gotten up to $240,000 of people traded for these little tokens, which I think ended up being tokens from a Chuck E. Cheese. And he was selling Bitcoin. Brilliant, right? He made a lot of money on Bitcoin. Probably got arrested. I got arrested and taken away as well by the crypto cybersecurity cops, which don't exist yet. But they probably will be robots just like in RoboCop. The interesting thing about cryptocurrencies, remember, if I take off the crypto, what is it? It's currency. That's all it is. People ask if we're investing in currency. No. Your currency is something you use to buy things, you hedge with. So when you're looking at currency, it can be volatile. Matter of fact, here, you can trade in Swiss francs or US dollars, right? You can trade in yen, you can trade in, so it's a cryptocurrency. But here's the thing. If I'm gonna buy a house, let's say from you, Dave Krill, let's say I bought a $200,000 house from you, and he was in mortgages, so he was actually commercial mortgages. But tomorrow, that cryptocurrency drops 40%. So now I just gave you, 120,000 versus 200,000. Would you be willing to accept that kind of volatility? No. So until you can transact something with pretty high certainty, there are governments who are accepting it. People are accepting it on the fringe. By no means has anybody switched over to it. By the way, what also do they value cryptocurrencies in? US dollars. So somebody told me, oh, they're going to convert it all to cryptocurrency. I said, well, what will they value it in? He was floored. He's like, well, what do you mean, what will they value it in? If it's all switched over to crypto, what are they going to value it by? Well, there'll be some agreement. So here's the point. It's an agreement between you and I that this thing that's worth nothing has some value. It's like a baseball card. It's like a dollar bill. These are currencies in some form. So when you look at it as well, there's a whole bunch of things coming out. It's all digital. So anybody here have heard of ESG, emotional social good investing? It's the second big time in my career it's come back. To a lot of your kids, they're looking much more at this, which is, I want to make sure that there's no guns, no tobacco, nothing that's hurting the environment, nothing with, child trafficking and all. Well, actually, you know what cannot be an ESG fund? Do you know about the electrical usage of people who mine cryptocurrencies? It is massive.
There is no ESG in cryptocurrency. The second thing is there is a ledger, but do you guys remember all the money laundering that used to happen? So if you can be anonymous in owning a currency, how easy do you think is to launder money from weapons or other illicit things? Where would that money be going? So you look at ESG, but you look at there's issues to solve in this as well. But I want to bring these things up to say cryptocurrency, we're watching. Is there something in it? More likely what we're going to do like with the internet is we're going to invest in the basis of it. The blockchains that are there, the technologies that are behind it, and the companies that are being transformed because of it, more so than investing in the coin itself. Could you invest in the internet? No. It's just a communication system between us, but you can invest in Cisco. You can invest in all the companies that are based on the internet now, Apple, Microsoft, right? So that's what we're going to be looking at with cryptocurrencies as well. So if you dabble in it yourself, that's up to you. We're not going to become crypto trading experts. We understand it. We know what it is. We'll kind of keep you up with it. Also volatility. I talked to a crypto expert. I do this stuff so that I can actually, I'm pretty fortunate. Abundance 360, everybody remember 8 years ago, I came back from Abundance 360 and I told you about cryptocurrency. Everybody remember that? I probably talked about 100 things at that time. But the cryptocurrency at the time was a piece of paper that I got from Peter Diamandis that said, with these codes here, you have $10 in Bitcoin. I'm like, so what? Toss that, right? Today, that would be worth $11,000. Did I know it at the time? No, no idea. I don't even know where that piece of paper is, but that's what happens with crypto. That Bitcoin is now gone forever. So whatever the stash of Bitcoin is, it drops as people lose it. There's only a certain amount out there. So these are kind of things that are out there. But another crypto expert said this: 12 years he's been in crypto, investing in crypto. He has seen 3, now almost 4 crypto winters. That is the dropping of the value 85%. So you look at volatility. This expresses volatility in a huge way because this is basically an example of human emotion. Does anybody here, somebody who's maybe a little bit irrational emotionally? Don't point. Don't point. But this is going to be the expression of that. So if you think the market's volatile, triple that on cryptocurrencies. But this is based on blockchain. There's one thing that's coming out of it super important. Blockchain technology is going to change the way business is done. So that's a huge, huge part of what we're looking at. Blockchain will allow us to transact entire buildings saying, okay, Steve, you own that house. I'm going to write you a check for it right now. Matter of fact, I'll transfer this money to you. I own it tomorrow. We don't need title companies. It's already shown there as public information, public blockchain. It's going to change the way we transact, the way we do business. That's what we're looking for. Companies that will change how we do business, change how we watch movies like Netflix, change how we network computers, change software, change how we're able to meet together. Those are what we're looking for. So any questions on cryptocurrency? Any really tough ones? What's that?
Where does the money come from?
Where does the money come from? From people putting it in. Yeah.
Who gets the money and,
So
I mean, this all started out as nothing.
correct. So where's the money?
You bought crypto, but who did you buy it from?
It's the same thing as, let's look at this. So a cryptocurrency, you bought it from somebody who created it. There's a gentleman about 12 to 15 years ago.
Out there that's
Yes.
really rich now, huh?
Well, there's a lot of people that are rich on people's trading of cryptocurrency, buying it. But what it basically became is a ledger, a place where people could trade money for this electronical impulse and a mathematical equation around this electricity. So they're calling that a Bitcoin. So what you said is, I'm going to give you 10 cents for that because that's crap in the beginning, right? Now they're giving you $30,000 for that same crap. Why? Because you want it more than I did, so you'll pay more than me. Oh, well, then I'll give it to you for $31,000. So you're looking at people saying, well, you ever seen somebody say that? Like, there's something worth nothing. Like this piece of paper right here is worth just maybe a quarter of a penny. So what we'll do is, oh my gosh, that paper was written on by Michael Jordan in his rookie year. All of a sudden, that paper that's been written in by Michael Jordan in his rookie year is worth $100,000 because of people's perceptions. It's the same thing with Bitcoin. So now it's you trading it. What started out as worthless, Dogecoin, others as well, started out completely worthless as jokes. Now people go, oh, but I need it, I want it. It's up 13,000% from a 0.01 cent to like 60 cents, just because of people's trading. So it's playing on human emotion. So
who got your money?
Who got your money? The crypto, essentially, if you look at who starts a cryptocurrency, the blockchain. So let's just say Jack Ma. That's not who it is, but just say Jack Ma started cryptocurrency. So he's going to say, I've got these cryptocurrencies here. You trade me money for it. then you trade, well, initially, but just like the stock, a public company got the money for stock when they first initially did it. Who gets the money for all the trades? So right now I have a basis on Netflix of $1.22. It's at $500. Well, who got the money after the $1.42? Nobody. Netflix got the initial. It's you and I back and forth trading over time. So somebody made some money. Well, somebody lost money. It's a net zero-sum game. So if somebody becomes rich in it, somebody came poor in it. Stocks, cryptocurrencies, think about this. Somebody wins, somebody loses, right? Somebody gave money for nothing to start, as we're talking about here. So it's an interesting market. It's a nascent, it's an early market. Just like emerging markets, things without a lot of information have a lot of trading volatility and swings. Is it the next biggest thing? Yes and no. So it's yet to be seen. I've seen so many things that could be the next blockchain over my life. Good night. That was kind of fun. All right, so. Yeah, exactly. And that was my cutoff music. You've seen the Oscars, all right. I get pretty excited about this kind of stuff. And I haven't talked to you forever, so it's gonna be like 4 or 5 hours. So just settle in. This was supposed to be like a 2-minute slide, but no, love the blockchain questions. These are great. We'll continue with this. We've got a lot of blockchain experts I'm close to because of Peter Diamandis, and I can go ahead and we'll bring this data to you as it's important because there's a lot of misinformation on the internet out there. A lot. Okay. Market update. Market update. The gamma. That was fun.
That's a tough act to follow right there. So market update. I mean, here, Kurt Cobain. Anybody know Kurt Cobain? Nirvana. His drawing from when he was like 12 or something like that just sold for like over $200,000, right? So that these things are starting to happen, like Chris was talking about, non-fungible tokens. These things are selling for astronomical amounts. It's a drawing of him being a rocker when he was 12, right? I mean, isn't that crazy? 212,000. But if you love Nirvana, you love Kurt Cobain, it's worth something to you, right? Just like something like Michael Jordan, probably wealthier now than when he was playing basketball, but everybody loves Michael Jordan and wearing Jordan brand gear. It's the same concept. So market update. Hey guys, who here loves opening their statements right now? Pretty much everybody, right? It's fun right now. It's enjoyable to open your statements. Enjoy the ride, you guys. Enjoy it. A lot of people are like, markets are too high. This is too good to be true. This is the reward for being an equity investor right now. This is it. Now, as soon as I say this, what's going to happen tomorrow? The markets are going to go down, right? But this is the enjoyment part of it all, of being an equity investor. You deserve it. You've earned it. You've taken the risks. Enjoy opening those statements. Now, when the markets are down temporarily, don't open the dumpster. Market updates. If we can go forward here, I think I get to talk about things that are bad now. So here, market corrections. Now, again, the markets feel good right now. Just be prepared for volatility. Be prepared for the Dow Jones to, maybe fluctuate 5 to 7 to 10%. We haven't seen that in a long time. People are getting used to the mutedness of the market right now. This kind of keeps going up, keep going up, keep going up. Get ready for this. I'm not saying it's going to happen, but when they do happen, they're swift and visceral. They come without warning. Their length of stay is unknown. They're not pleasant when they're around. As you know, that is my in-laws, right? You guys have heard those jokes before, right? Now listen to this. I have an add-on to this joke. So I started building a house last year in September, okay? They said, hey, by the way, your house is going to be done in August. I said, perfect, great. I'm going to list my house in July, which would be right about now, right? June, July. We're going to move out of my house and move into the new house. Oh, but then they say, hey, by the way, your house is going to be done till the end of October, right? You guys have heard these stories, right? So now I have to sell my house now. Where am I going to go live? Chris. I'm moving in with Chris. I might have to move in with my in-laws. Think about this. Think about how terrible that sounds, right? But anyways, market corrections, they're very necessary. They're temporary, though. The S&P 500 is at 4,200 right now. The Dow Jones is at 34,000. Zach is going to touch on a little bit of this. But when you were born, the S&P 500 was probably around somewhere between 15 and 30 points. Your grandchildren born today, the S&P is at 4,200. It's going to be much, much higher when they get to this point of the idea of retirement for your grandchildren. Who knows what the S&P 500 will be at that point in time? But if it was 15 or 20 for you, like it's 4,200 right now, think about the massive increase that is by being a stock investor. So That's market corrections, and we can go to the next slide here. That would be helpful. Not having the clicker is tough. All right, so this one is called the annual end of the world. You can't see it. I'm going to explain it really simply. Throughout the year, the markets will go down, okay, from time to time. The average is somewhere between 10 and 15%. Zach later on is going to put some numbers to that and some what the headlines are going to look like if that does happen. Now, what's interesting about this, I think, is that there are three or four red dots way at the bottom. This chart is a 40-year chart, okay? And there's 34% down in a given 1 year, which was in 1987. We all know that one. 34% down in 2002. 49% in 2008, 2009. That was the financial crisis. That was 12 years ago already now, 13 years ago. Wow. Then you have, COVID. You have the last year of March, down 34%. There's something magical about 34%, or a little more than 49%. This is over 40 years, you guys. The idea of the markets going down 30, 40% doesn't happen very often. It happens once a decade. That is the absolute buying opportunity. A lot of people think the markets are too high. They're waiting for that 30% drop. Something out of the blue, a black swan event, as they call, right, has to happen for the markets to go down by 34%. So that's just an interesting piece on market corrections and the annual end of the world. Don't panic. We're here for you. A lot of you have been through these corrections before. I really can't say that because of compliance, but you're usually in a better spot today than you were before. Does that make sense? Everyone's shaking their heads that have been through a correction before. You're in a better spot there. So the drawdown frequency, this one's really tough to see, but when you think about this, the recovery matches the downturn. Think about this. We look at 2000, Y2K, 2000, 2001, 2002. The recovery was 3, 4, 5 years it took, right? Because it was a deep drawdown. Look at COVID, right? Back in March last year, down 30% in 1 month, basically, which was March and April. Look at the recovery, right? You all know how that story is ending right now. It's going on right now. That was a very fast recovery from that downturn. So the recovery matches the downturn. That's something we learned over the year from Jeremy Siegel and some of our other coaches as well. So that's the drawdown frequency, and I'm going to hand it over to Zach right now.
Thank you, Ken. Really appreciate that. And with this new slide here, the biggest lesson from 2020 has been stay the course, as you guys would know. We really want to offer a congratulations to each of you guys for doing so, because here's why. The S&P 500 return for market bottom as of market close on Monday was 90.21%. From the return from the high on February 12th, 2020 is 25.66. So we had a 34% market correction and still had a 25.66% return. Congratulations for staying the course. And like Ken said, you earned it. The NASDAQ.
It's okay to applaud.
The NASDAQ returned from the bottom 106%. Returned from the high 44%. The Dow Jones Industrial Average 85%. Returned from the high 16%. And the Russell 2000, which if you guys are watching all of the Wednesday webinars we're giving, what is the Russell 2000? It's the index that tracks small caps. So that return from the bottom is 129% since March 23rd of 2020. From the market high, 36.90. By staying the course, you guys have set yourself up for the future. And also, we'll show a slide of not everyone did that. That's why it's a congratulations to you for doing so. What does the media like to do when they talk about the markets? They love to scare us, right? What do they generally put in terms of what the market is doing and how they're tracking it? Points, not percentages. Mike on our team brought in a newspaper from 1987, 1 week after Black Monday. The Dow Jones Industrial Average at that time was 2,000. The biggest one-day drop occurred on Black Monday, and it was 22.6%, or 500 points. So when we put it in context of the biggest one-day drop and they say 500 points, that's a scary number, right? 500. Well, a 5% correction in the Dow Jones Industrial Average now, which is right around 34,000, would be 1,700 points. So when we turn on the TV and see 1,700 points, it looks like the world's ending. What Ken showed us with the market drawdown. Oh, we got it. That was just me.
That was you breaking up.
Yeah, appreciate it. So a 3% correction would be 1,000 points in today. And a 10% would be 3,400 points roughly. A 15% correction would be 5,000 points. And another 30% correction, which we just made it through just over a year ago, would be 10,000 points. So when we turn on the TV and see 10,000 points, that is a massive difference, even though that has happened over history at the same time. Be aware of the points.
So here's what I want to do before Zach leaves. Anybody here born after 1981? They have never seen double-digit inflation. Think about that. We're talking about inflation. Your kids have never seen, but they've heard from you, just like the Great Depression you heard from your parents, about double-digit inflation. They don't know what it means yet. You can tell them, but they won't listen. It's an interesting one. So at any rate, I just like to make fun of Zach sometimes, because pretty much since he's been here.
Quite a bit after 1981 as well.
I do enjoy making a little fun of Zach because, again, I think he's been 27 since he's been here. I mean, when he was 24 and 5, I called him 27. I do refer to him as the oldest member of our team when it comes to how he acts. So if you want one of those seasoned veterans on our team, he's right there. If you want the most childish, you might be looking at him right here. And Lisa not. So you've all been with us through corrections before. Great way to show that. But here's a question I often get. Hey, and people love to pontificate. Anybody told you there's a correction coming soon? Anybody that you know said, hey, there's a correction coming? You know what I say? Yes. And guess what happens to the conversation? It stops right then. Well, so do you know it? You're going to get out? No. It's two answers. Yes, there's a correction coming. No, I'm not getting out. Well, why not? Why not? Because we're prepared for it. I don't know when it's going to happen, but I know what we're going to do when it happens. Now, you know our philosophy as well. I don't know what's going to happen in the world. I don't know what's going to happen tomorrow. I don't know there's going to be 3 mowers here during our seminar. But what do? We adapt, right? So I don't know what's going to happen, but you've been with us now through a pandemic that has killed many Americans, many people worldwide, and is still ravaging the world. And guess what? You've made it through it. What did we do? Did we do anything radical? Yes, we did. We did nothing except take advantage of downturns. That's huge. And we commit to making sure that you continue to do that because that is a successful strategy. As Ken mentioned, a third of people in this correction sold all their stocks at some point if you're over the age of 65. As a study by Fidelity, a third got rid of it. So let's say you sold when it was down at the bottom. You felt good about it for about a day, and then you felt horrible about it now. 92%, you lost half the money you could have had. If you have $500,000, you lost $500,000. Think about that. So it's not worth it. Anyway, you've seen those before. Some of the big corrections, we've got this as we go back over time. 29, 90, oh here, I'll just read them to you because it's kind of fun. Maybe not for you, but it is for me. Down 29% back in 46, 21, 28, 22, 36, 48, 19, 27, 33, 20, 19, 49, 57. Was that the Great Depression? No, it's 2009. 2011, 19%. We just went through 34 as well. You've been through this. And guess what happened after every single one of those? Recovery, right? Okay, enough about corrections. I love teaching this because you become great investors. You know this. Matter of fact, I could probably have some of you get up here and teach this portion of the slides anyway. Stock market since 1990. Here's what's interesting. We talked about the potential for a bull market coming here. And what you're starting to see here is a wonderful, wonderful bull market, maybe halfway through it, but you're seeing there's a lot of corrections in normal bull markets. You'll see the last one we had from 1980 to the year 2000. I know the slide's a little bit small, but you're starting to see a lot of similarities in this as well. And I know a lot of people did not believe this was a bull market, but it exhibited the signs of it for the last 10 years. and you stayed invested and you benefited. That's our goal as well. Looking at this, what could cause it to stop? You're going to find that Jeremy Siegel said this as well. When they raise interest rates, you're going to see people pause and go, whoa, what's that? People's lump sums on their pension are going to be way less, and they're going to freak out a little bit. Now, that's temporary as well. But I want to tell you, these things are coming. If anybody has a lump sum pension offer from their company, which we have a few clients getting them now, it'll be the biggest they've ever seen right now because these are the lowest rates that exist, and it's figured off of the interest rates predominantly. So super low interest rates, massive lump sum. There's some people who are retiring a couple years early because of it. There's no reason to retire at 40. So for all your kids who are looking, oh, see, I want to get out now. I should. Chris said I can. Right? No, that's not what we're saying. But anyway, so it's a hard slide to see. I won't go through that much because I love that slide. That's one of my favorite slides. But it goes through the Industrial Revolution. It goes way back here to the, if you even look back at the Great Depression that your parents said you'd never make it through. Who here didn't make it through the Great Depression? I'm joking. I love that question because people are, I think I did. So investor emotions. Anybody here have these? Anybody feel compelled to buy or sell when things are way up or down? I'm going to raise my hand. I do. I'm not going to lie to you. I feel it. Guess what I've chosen to do? Nothing. So when it's way down and I feel like I don't want to buy, guess what I force myself to do? If I have some extra cash, I will buy. I've learned that lesson over the long term. I've been through it enough. So investor emotions are a great thing. When you're looking at are investors rational or not, Zach's going to tell you if you're rational or not.
We shared this slide a couple times when we were at Blue Mountain, went through, but it's especially important looking back at 2020. Has anyone here over the last year felt the excitement, optimism, anxiety, denial, fear, depression? Anyone feel any of these during the last year with COVID and everything else?
Hell, did anybody feel those all today?
Has anyone felt that with their portfolios, right? As Ken mentioned, things look good right now when you open your statements. A few times last year, it may not have been. It is the normal cycle, and to feel all of those feelings are completely normal. It's okay. What we don't want to have happen is make irreversible decisions based off of these emotions.
Okay. There you go.
Investor behavior. Russell Investments recently ran a giant study to show the value of an advisor assisting an investor over time. And that value in 2020, the advisor add was 4.81% added return through assisting them through investment management, 0.29 of the 4.81. Annual rebalancing, which we'll talk about later today as well, and how it was massive in 2020, was 0.32. Planning through Roth conversions and other planning strategies, 0.72. Tax smart planning, 1.31 of the 4.81%. Behavior was a 2.17% value add. Just by managing behavior and not making those irreversible mistakes when we feel those fear type moments like we did last year, was a 2.17% added return by managing those over time. Absolutely incredible study by Russell Investments, and wanted to make sure to share with you how big of an impact that really was. Going into the next slide. This one absolutely breaks our heart when we look at 2020 when it comes to investor behavior. For those of you that remember me talking just a little bit ago about the massive returns since market bottom in all of the different categories, in the S&P 500, the Dow Jones, the NASDAQ, etc. In US equity, the net outflows was $220 billion. So $220 billion missed out on almost 100% return from market bottom. And as Chris mentioned, almost a third of investors sold all of their equities. And if we look at liquidity, $681 billion was added in the short-term money market, receiving 0.00 nothing. An irreversible mistake for their long-term plan.
This is something we've always talked about, and this is a great slide that you've seen. Basically, people have been putting money into bonds while stocks are going up. Guess what will happen with the bond investors? It's called disintermediation. It's called bad behavior. When the market finally peaks, now you've not seen people blindly buying stocks. You've not seen that. You've seen a few flashes here or there, but when it comes to the end of a bull market, anybody remember 1995 and the conversations you had? Oh, anything.com, hell, I bought that off the IPO and I made 700,000%, right? That was what happened. Are we there yet? No. Maybe cryptocurrency people are talking about it potentially, but really you start to look at it, there's still some time here as you go through. This is probably the most interesting part of it too, and thanks, Zach, for showing this, is this blank slide here shows me that there is very little going on right now. So this is how your mind should be, just like when you hit a golf ball. I'm joking with you. I got it. It's up there. That's pretty cool though. I like that slide. When stuff comes up like that, it's called adaptability. First of all, I know you guys like jokes. So I got this from the DeBoer family. So I know these by heart, but I like these because it's kind of funny. If two vegans get into an argument, is it still considered a beef?
What's really funny about Chris's dad's jokes, I'm not at that stage yet where they're that funny to me. I think I have to be a dad first. But I was recently volunteering at the Kettle 100, which is a 100-mile race in LaGrange, Wisconsin. And I was at about the 13-mile mark, and if you remember what last Saturday was, it was about 90 degrees and 90% humidity at 8 in the morning. These people were pretty down at mile 13 already. The guy's like, man, I just got to hear a dad joke. I'm thinking of all the ones that Chris has mentioned. I'm ready for this, I think. And the only one that came to my head is, when does a dad joke become a dad joke? When it becomes apparent. And this guy absolutely started dying laughing and hopefully made his day and his race easier, but I never thought it would really come into play.
And the guy won the race. So if you look down that fairway, down that way over there, you can't see it, but I just wanted you to look that way. Our house is that way, and there's a big trampoline there. So what's interesting is that I took our bed out, and I put the trampoline inside the house, and my wife hit the ceiling. That actually sounds way worse. That's not really a dad joke. That could be actually, don't take it that way. She was jumping on the trampoline and hit the head. Hit her head. Anyway, come back here. So this is back to, I want to show you something. The last 5 months are probably an example of what may be beginning to occur. The last 5 months are showing here, equity investing, stock investing, more money has come in the last 5 months. Probably, it's being updated next week, over the last 8 months probably than it happened in the last 10 years total. Does that surprise anyone? More money has come into the markets in the last 5 months, after it's already got a great track record, than it has in the last 10 years. A little late to the game? Maybe, but it may be what's going to push equities above where they should be. One thing Jeremy Siegel said as well, stocks are presently valued correctly. The 22 forward PE, 24 PE is about where they should be right now. And he's followed this over history almost to a dotted line. So stocks aren't overvalued, but at the end of a bull market, historically, they will be. So we're watching that. We're going to watch those kind of items. People think, oh, too high, it's too high. I go, too high from what? Earnings are flying as well. Also, Dr. Siegel says he believes that there could be 10 to 20% more earnings coming this year than are expected. What does that typically translate to? Surprise on the upside and maybe market returns. So at any rate, that's what we have there as well. Optimism, and this is Nick Murray's. Optimism is the only true realism. Anybody here believe that? I do. When you look at realism, optimism is what gets us there. So we want to give you as much hope as possible because there's a lot of really, really cool things happening. And for any of you who might fall asleep, at the end of this, I'm going to do the future loop. There's 8 or 9 things that have occurred in the last probably 6 months in technology that can literally change the world. So I'm going to show you those as well. Reasons to be optimistic. Is it that truck will pass us very soon? God bless the Doppler effect. If you don't know what that is, you'll get it later. So reopening versus recovery. People say, are we in recovery or are we reopening? Anybody here want to venture a guess? You can label it whatever you want because if it's your opinion, you're right. It's a reopening, it's a recovery. We did something rational or radical, which is to close the economy. And guess what we're doing now? We're recovering from that. But when we closed the economy, what we really did is we shifted a lot of what we did to other places. We shifted to online. A lot of people have benefited. Zoom, right? I just got one word, Zoom. Radical technology, right? Immunity as well. And Ken has gone through some of this. We'll talk about in just a minute. Might there be immunity? Might there be herd immunity? Might we be seeing a lot of people? I mean, has anybody here been to an event over the past year? I'm sorry, past month? Been a lot of people at it? No? No? So most people have. And guess what's happening? Have you seen spikes in coronavirus? Have you seen spikes in related illness and deaths? So there's a chance. Who knows? We might be near the end of the tunnel. Again, looking at this, it's going to be the toughest thing to change is your personal mindset on when to go out and when is it safe. It's going to be tough because we've been protected for a long time. My mom feels uncomfortable going into a grocery store even though she's vaccinated and has a mask on. She feels uncomfortable. She goes, when am I going to get over that? It's going to take a bit. It's going to take a bit. So we've got that going on. Fiscal response has been very strong. So we'll talk about that in a minute. Matter of fact, anybody here? So the money that was given for 2009, this money that we've given for this coronavirus is 9 times greater. Why is it different? Why is there inflation? Because in the first, in the bank crisis, we put the money in bank coffers that did go out of business. This one, who do we give the money to? Businesses, unemployed people, people with children, people under certain incomes. We give a lot of money out. This went directly to the consumer, and guess what they've done? If you know Dr. Friedman, if you know Dr. Siegel, the movie's written. People spend it, and it's inflation. That's what's happening in this as well. So also low rates, housing's through the roof. People are paying anything for a house almost anywhere. It's a reevaluating the lesson. This weekend, my brother-in-law said, we bought a house in Galena. I'm like, what for? You live in Cedar Rapids, Iowa. Because they go, well, we thought it was cheap, it was a good idea, and we're going to VRBO it. So they can rent it out. But it's interesting. People are doing this all over America. You're finding that offers are coming in. Anybody had a kid sell a house or sold a house recently where they've got more than 10 offers? We hear about this, 10, 15, 20 competing offers. We knew somebody in Cedarburg, $390,000 house. They put $50,000 in over ask and didn't get it by far. It's like, whoa, it's kind of crazy, eh? But that's where people are sometimes with housing now. So one of our real estate agents said, hey, if you have a second home, sell it now. It's like, well, unless you don't want to. So I'm always on the other side of that. So there's a lot of reasons to be optimistic as we go through. Paths to herd immunity. So there's some paths here at the Storage Institute. We get a lot of different sources saying that, I think Ken was saying up to 40% of people in America are vaccinated. This is one of the most vaccinated counties in America right now. Actually, I think it's 55% or something in Ozaukee County, maybe 60. But when you combine that with people who've had the disease as well, we might be approaching that 70% or 75% magical place that can allow people to at least get some confidence to go out again. But you're seeing that grow dramatically every day. It's slowed a little bit here recently, but again, despite political things, despite whatever, it's interesting. It's great to see what's going on. We're starting to see optimism, hope, and people willing to think about going out again. So it's nice to see. Oops. I don't know what that was. There we go. A COVID tracker you've seen. COVID now is actually very, very similar to where it was back in March of last year when it was discovered. And that's according to COVID tracker and some of the different cases you've heard as well. So kind of enough about that. You've seen enough. If you guys want more COVID information, read the paper. It's there all the time. So I'm kind of done with that piece as well. But the shock I told you before was all the money went into people's hands and they're spending it. Anybody here feel different post-COVID versus pre? You've had brothers, sisters, relatives pass away. There's a joie de vivre for people to say, listen, let's eat, drink, and be merry, because you never know what's going to happen. So that's happening in America at the same time as well. Interest rates. Can we go interest rates, Ken?
Sure. Interest rates, they're low. No, in all seriousness, I mean, what we're seeing here is we're seeing that, it's much like the question before back in the 80s, what was your mortgage rate? 14, 16%. Again, when interest rates are really high like this, and they came down for the last 40 years, that props bond prices up, okay? So some of you own bonds, right? I mean, you own a mix of bonds and stocks in your portfolio. Why is it important? Because for the last 40 years, we've made a lot of money on bonds. The next 40 years probably look a little different. We're constantly searching, and Mike has done a great job, and we've all been part of these meetings about meeting with the investments that you hold in your portfolio. as far as what are we going to do with bonds? What are they? I mean, 85% of all bonds out there pay less than 2%. Where are we going to find the income that we need for retirement, right? Some of it's going to come from stocks, of course, but what are we going to do with the bonds? That's the interest rate talk. And Mike, do you want to come for a minute or two and just share, some of the meetings you've had and some of the updates that you've had with a lot of investments that our clients own at this point in time?
Yeah, absolutely. So I'm Mike, for anybody who doesn't know me. I started with Gentian Financial in December of 2018. I remember at one point going up to Appleton with Chris to do some meetings and saying to him that I wanted to get in front of some people and talk. And in that moment, he said, "What are you going to say?" And so I am going to be talking about the mutual funds in the portfolio and a little bit of these meetings that we get to do. And it's my privilege to be able to talk to these fund managers, just as it is to be able to talk to you guys every day.
So what it is, they used to call me all the time, and I used to get like 124 requests a day, and now I say, hey, you can go through Peter to Mike and Ryan on our team as well. Everybody here talks, but the nice thing about it is there's so much information that's important, and there's so much time that it takes to get that little bit of important information that now Mike's able to distill it for us so that you can benefit from it. It's fantastic.
Absolutely, and specifically in the last 3 days, well, Thursday, Friday, and Monday, so not yesterday, Peter, Ryan, and myself were in 9 meetings with some of the mutual fund wholesalers and even some outside wholesalers. So we talked to different mutual fund companies. Goldman Sachs is a great example of a mutual fund company that we don't own in our core portfolio, but they still bring something to the table every time we talk to them that we can bring back to you, or an idea of something they see within the portfolio where we could make a benefit somewhere. So they had a great topic yesterday talking about inflation a little bit, where they talked about birth rates. And this is the first time I've heard this. To sustain long-term inflation, you need a growing population. Last year, the birth rate was down 4%. So that's why some of these mutual fund companies see this as being transitory and stuff like that. Whether that's correct, it's everybody's opinion. But when we have something new, it's great to be able to bring that to the table and share that. Talking about interest rates.
I have a feeling though the birth rate's going to spike maybe next year. I mean, who knows, right?
Well, what's really interesting about this over time is we've found, and I've done this for a very, very long time, is if you look at our portfolio, we've got different views. You know why that's beautiful? It's called diversification. Because if they're right about, oh, interest rates are going to be this, or they're going to be this, we've got it covered. We've got it covered in some form. It's beautiful. I love those. I love the ideas.
Absolutely. And so another great example, Ken talking about interest rates and how you can generate income. So we had a conversation with one of these wholesalers, and we were talking specifically about how to generate income based on the amount of risk that you're taking. So taking risk, buying a long-term bond right now can be kind of risky because you're not getting the return for the risk that you're actually taking. So right now within the portfolio, we found that we're actually very well positioned with our high yield floating rate bond and our convertibles. And those are both very good hedges to inflation and also give you a return based on the amount of risk that you're taking with them. So those are things that we're constantly analyzing. We're constantly having the conversation. They're always like, when are you going to move out of this? What are you going to do? And we have timeframes for different decisions that we're going to make, but they help us make these decisions for when it makes the most sense. Another mutual fund I'd like to talk about in the portfolio is our global fund. This one is incredibly interesting because all of you own gold. In that global fund itself, there is a 14% allocation in gold. So anybody who asks us, what are you going to do? What's the hedge for the market return, stuff like that? We all have gold. And this is one of the reasons why we continue to own this fund, because they take a value investing approach and continue to raise that gold position. And something super interesting is that 10% of that 14 is actually physical gold, and they have a vault in New York City that stores it. So we're waiting for them to actually take us there for a meeting.
They said no when we asked.
And they said no when we asked. And we said, can you give us some Bitcoin to take with us?
And that's actually a great point, because people have brought up to them, what does a cryptocurrency do? Can you use a cryptocurrency to hedge, the return on the market? And right now their answer is it's too volatile. I think we can all agree with that, watching the swings and what's happening with, the market and the excitement with that. The volatility is just too much to be a safe hedge. And so it will never fit in their value-oriented portfolio. So just another great example of things that they do to stay up with the times. And right now, their answer is gold, and we like that decision that they've made. And so when somebody asks us if you own gold in the portfolio, hey, maybe we should buy some precious metals. You already have them, and that comes to being diversified and stuff along those lines.
Yeah, thanks, Mike. Appreciate that. It's nice to hear. I'll trade you because this mic kind of goes in and out. This mic goes in and out. Watch it. It's not even Great job, Mike. I appreciate that. So the one thing you'll find too right now, global funds in any form have been out of favor for a long time. Why? You've seen currency being U.S. currency strengthening for a long time. That's not good for foreign investments. But guess what? When it weakens, you can see returns that are phenomenal. They're multiplied. Remember, there's currency risk, there's stock risk, and there's country risk. So you're looking at things that are undervalued right now, like emerging markets. They can actually see massive returns over a short period of time. When value was heavily undervalued compared to growth, we're seeing, for instance, automatically this year, a significant increase in the value stocks over growth, sometimes up to 30%. And they believe that's going to occur for quite a while here. So those are the kind of trends we look for. I don't look for the day-to-day ideas. Oh, this, that, this. Like, okay, what is the trend I need to let people know of? So thank you, Mike. That's a tremendous piece because we get all these updates, and we get so much information in a day, in a week. We could spend days here. Maybe we should. So with that, I want to bring this up to Ken for planning ideas.
All right, this is the fun stuff, you guys. Now, this is the stuff I really enjoy because it's mathematical. You can figure this piece out. There's no abstractness to this. This is something you can figure out. Planning, when it comes to ideas and taxes, we will go forward here. So what happened here was the CARES Act came out. If I can get to it, here we go. In 2020, it was for coronavirus. We're past that. That's when the RMDs were waived for that 1 year. Remember all that? That's done now. Now we're in a new year, 2021. The RMDs are back. And I think a lot of you know that. Now, the Secure Act came out in 2019. It actually took place in 2020. What it was is it raised the RMD limits to 72 versus 70 and a half. That was the big one there. There's a couple other pieces here. Qualified charitable distribution, QCDs, those are still 70 and a half. You literally have to be 70 and a half years of age to give a portion of your IRA to a charity. That's what that stands for, qualified charitable distribution. What does that do? If you have to take out $40,000 from your IRA and you give 10,000 of it away to the church, you don't pay taxes on the 10,000. It really is a beneficial thing if you're looking to do that with your money. Now, what I think is interesting right now is, and some of you may have read this, there's actually Secure Act 2.0 being talked about right now. So not only did they raise the RMD age from 70 and a half to 72, now they're thinking about moving it to 75, okay? And there's a gradual step in between. If you're 72 this year, you're 73 this year, you're 74 this year, there's actually going to be a table to that. That's being talked about right now. Now, again, it's just something that's being talked about. Now, if it becomes law, we will certainly let you know and we'll talk about it. But it's here at Secure Act 2.0. The other big thing about Secure Act 2.0 is the Roth IRA. The Roth IRA is a very beneficial account for you to own. Why? Because all the earnings in there, if you hold it for the proper amount of time, is tax-free. Now, some people say, now, is the Roth going to go away, right? That's a conversation that's been had for 15 years now. Is it too sweet? I will tell you from the way that these laws are being structured is that the government likes Roth IRAs. Why? Because it's tax revenue today. The government can't see 2 to 3 years or 5 years down the road. They see today. They like Roth IRAs. How do we know that? Because in the Secure Act 2.0, all catch-up contributions. Now, a lot of you are retired. I know a lot of you are retired in the audience right now. But for those of your children or some of your friends that are still working, there's catch-up contributions. They're talking about increasing the catch-up contributions after you hit a certain age. Where are those catch-up contributions going to go? To the Roth portion of the 401k. That's how we know the government still likes Roth IRAs, right? Now, some of it's going to be means tested, as Tom sits here in the front on health insurance and Medicare planning, who works with quite a few of you. We know that some of that's starting to become means tested as far as income goes. But we'll keep you up to date on that. Now, planning opportunities. Now, when the markets get rough, let's make lemonade out of lemonade. Lemonade out of lemons. That's what we're here to do, right? Let's make lemonade out of lemonade.
That's great.
That sounds pretty good?
That's easy to do.
I think we should have a lemonade stand back there and make some lemonade out of lemonade.
You got lemonade if you want.
There is lemonade back there, so let's have some. Cheers, right? All right, so rebalancing. What do we do when things get tough or not tough? We rebalance your portfolio. There are pieces in your portfolio that do really well. Last couple of years, it's been large cap growth. Amazon, Microsoft, Netflix, those are companies that are owned in some of these large cap growth categories. They've done really well. We rebalance. We're forcing ourselves to sell high and buy low by rebalancing. I'm going to take a break here. That's pretty funny, actually. Tax harvesting, that's a fancy word that if you have a personal account, a basically non-IRA account, and the markets get rough for the time being, we're going to go in there and sell some of your positions at a loss and simultaneously buy a new fund in its place. Why do we do that? Because you can have the losses can help you on your taxes. You can use some of those as tax write-offs. Okay, so last year, 2020, we saw March and April. If you have a personal account, we were in there selling positions at a loss. A lot of you paid a lot less in tax last year because of that if you have a personal account or a trust account. That's what tax harvesting is. Roth conversions, switching money from a traditional IRA to a Roth IRA. Why do you want to do that when the markets get tough temporarily? Because you think about this, your IRA is temporarily like a coil, like a spring. And now, when we move it over to the Roth IRA, if it makes sense from a tax standpoint, and the recovery happens, the spring bounces back up, the money's in your Roth IRA, the earnings are in your Roth IRA, and guess what? They're not. They're not taxed at that point in time. If we'd have left it in your traditional IRA, you get the recovery, still taxed. So if it makes sense from a tax standpoint, we're going to be having conversations with you about these things. Charitable gifting, a lot of you are wonderful. You do give a portion of your money away to churches and different organizations. Let us know your wishes on that. We can certainly guide you down the right path. Qualified charitable distributions, that's the 70.5, where you give a small portion of your IRA, or whatever portion of your IRA you'd like to a charity, up to $100,000 per year. Life insurance planning, this one is, do we have life insurance? Do we need it? Do we not need it? What do we do with it? Some of these life insurance policies have cash value to them. They're like a whole life policy that lasts your whole life. There's like a little piggy bank inside of the life insurance policy. What do you do with it? Do we keep it? Do we not keep it? Again, everyone is different on that as far as your scenario goes. We will guide you if you have questions on that. With that being said, I'm going to hand it over to Zach.
I'm going to drink lemonade.
Just hopefully not out of.
Yeah, I'm going to drink it out of the crap.
Real quickly on the life insurance planning, Ken mentioned it perfectly on the sense of cash value. If any of you guys have been paying into whole life insurance policies for a very long time, you may have cash values that have a significant balance. A lot of questions that have come up are, what should I do with this cash value? Are there ways to maximize it? And recently, Chris, Ken, and I explored what those opportunities are. And a few of them can be is you can take the life insurance policy with that cash value, 1035 exchange it to another, have a lower death benefit, but it might be able to add a long-term care rider on it if that's a concern for you now as well. So there are opportunities. You can use the cash value, you can take it out tax-free up until the basis, and then it's ordinary income for yourself. You can also take loans against your cash value, and that's tax-free income for yourself as well. So that can be paired with a couple of other planning ideas. We're exploring those, coming across those. If you guys are interested in those or know somebody, we can potentially explore them with you as well. Why we rebalance? Ken mentioned that when we talked about the value of an advisor, it was about 0.32% compared to their study. We found that depending on the time frame, it was all the way up to 1% advantage to do so. And it's simply a disciplined process to buy low and sell high. And the best example we had was last year. This chart is our jelly bean chart. It's going to be impossible to see the numbers, but if you look at the colors on the top and the bottom and the middle change all the time throughout the years. This is from 2020 back to 2006. Every single year, the categories change. The last 2 years, small cap was at the top, and we actually did a massive study on our own to see what it looked like in 2020. It's important to keep a long-term perspective. We're like, man, 2020 was such a crazy year. What did it look like last year? And if you would have rebalanced at any time during 2020, more than likely you would have been buying small cap value, mid cap value, and global real estate. we're like, man, what does the start of this year look like up until now? The best 3 performing sectors: small cap value, mid cap value, and global real estate. The worst 3 were the 3 best performers last year, which was small cap growth and large cap growth. Amazing. One of the biggest mistakes happens for investors when they look at that, because last year, if we look at it towards Q3, large cap growth was the best performing sector. Most people look at that and go, man, I'm in small cap value, that's down 20%. Everyone's in large cap growth, that one's doing extremely well. I'm going to sell out of the one that's lower, buy into large cap growth, and that one's a better one. 2 months later, completely the opposite. That's why we never try to guess or assume, and how rebalancing is a disciplined process to make sure that we don't.
Thanks, sir. I like to put on glasses because it makes me look smarter.
It's not working.
That's it, I can't see with them on. We're reading as you get closer. It kind of reminds me this morning. So my daughter said, Dad, you haven't been listening to a single thing I said. And I thought, that's a strange way to start a conversation. I tend to like to connect things that are disconnected. I'm a bit disconnected. But this is one thing. I'm going to say hysterical tax rates. You've heard about hysterical tax rates, right? Oh, it's historical. Well, still, historical. They were 90% at one point. Think about your top bracket being 90%. Now, what happens in 2025? We all know this. You follow this very closely. The provisions we have for our tax provisions right now sunset, and they go back to what they were before the reduction we had a few years ago. But also, you've heard a lot of conversation about what's going to happen. And there has to be a bipartisan agreement to some of the tax increases. Basically, if you make over $400,000 a year, be careful. If you make over $1 million a year, be super careful. But that's really what's going on. So taking a look at what's happening, there's a lot of proposition, a lot of provisions that are going on, but we're going to take a look at what really happens rather than just give you, hey, this might happen. So we don't alarm you with a lot of what might happen, but as it becomes more solid, we'll talk more about it. But historical tax rates, as you go back, when I said hysterical, that's because 1941, the top tax bracket was 94%. That means you get to take home 6 cents of the dollar you earn. Who here's for that? Not a soul, right? That's the kind, and you actually look back all the way to 1981, it was 70%. Wow, how could that be? There were a lot of tax loopholes and a lot of tax evasion. So tax evasion back then meant how many years in the Gray Bar Hotel, right? So we want to avoid taxes, but we don't want to evade them. Big, big difference. So back here, it was as low as 28% in the 1990s, as high as 39.6. It dropped here recently as well, up to 39.6 and back to 37%. So you're going to see that's the highest marginal tax rate. And what you're seeing down here is then the capital gains rate. It was as high as 39%. Matter of fact, back in 1916, the capital gains rate was 77%. Who here wants to invest and make money then? Woo-hoo! You get a quarter of what you make. Government gets the rest. So you come to some fair agreement, you'll find that sustainably, Jeremy Siegel believes about 26, 27% is as high as capital gains could go, where it's basically going to be a non-issue for most people out there, but not the 39.6 or the 40% they're talking about. So there's a lot of issues that go on here. We don't want to be, we know taxes are important. You want to pay what you need to, but not more than you need to. So we're going to keep you abreast of taxes as they go along. There's just not changes right now we need to take, other than what Ken mentioned, the Secure Act. We're going to help you continually with best tax policy. Okay, any questions on tax? If they're really tough, we'll send them to Ken. Actually, we'll send them to Ed Slott, but that's one case as well. So one thing I want to do here, everybody here like the future stuff we talk about, some of the future deals? Okay, so there's, excellent. Who here is asleep? Okay, good. It's starting to get sunny on one side, so I'll continue pretty quickly. Here's what's very interesting. I've talked about a few of these, and that's why I want to bring them up. This is future. These are things that are happening now. This is not my huge seminar. We've talked about crypto. What I'm going to do next time is go back when we announced what it was and what it is today. So if I go back to the 9 years ago, I started at Abundance 360. What did I talk about when I came back? Drones. Oh my God, there's going to be drones. No way. You see these little things, they fly around. Guess what? Everybody's not like, yeah, we heard about that. But we want to give you an idea because it's kind of a fun timeline. You've known about these all along, maybe sometimes before your kids. So at any rate, anybody here do TikTok? Me neither. It's the fastest growing social media platform, TikTok. I thought, is that like a game? I thought it was a game. It's not. But there you go. Deepfake creates an entire K-pop group. Anybody know? First of all, anybody know what K-pop is? Okay, good. We got 4 or 5 people. Good. So K-pop is Korean pop music. It's become very, very large around BTS. The biggest band in the world right now is BTS, and they're from Korea. What's interesting about this is artificial intelligence created an entire K-pop group that doesn't exist. It's all fake. And guess what? They're extremely popular. Guess how much they have to pay the artists? 0. Think about this on a go-forward basis. We can create entertainment for actors that don't even exist. So anyway, going forward as well. Brain signals are recorded by quantum technology, so they actually show inside our brain the signals that are occurring for some of us. I know you might be looking at others. I don't think sending brain signals in there. But anyway, they've been recording them. So now what we can do with that, we can see what happens with Alzheimer's. What happens with these diseases we've seen. It's a step towards curing some of the major diseases that are affecting us for living longer. Yellowstone, they've used autonomous buses. Think about that. Hey, I want to go over to the big guy driver. Hop on, no driver, it autonomously brings you there. Very, very cool. So you're seeing some of these things in reality. Injectable microspheres to repair ailing hearts. So you've got a bad heart. You can actually go through now and find that you can inject little tiny microspheres, and it will actually take little abrasions in your heart and repair them. Absolutely amazing as you go through. Looking as well, 3D printing of liver tissues. We're actually able to 3D print liver tissues and have surgeons operate on full organs of liver that don't exist in a person. So this stuff isn't just the potential. This is actually here. The question is, when do we use this in human beings? When people have cirrhosis of the liver and still live, or kidney issues, or other items as well? We are on the forefront. I've told you about this from several of the people we've had before. This is amazing, and it's here as well. Robot scientists offer insights into the origins of life. So we now have an AI robot now that's going in and offering us insights on what may be the origins of human life. It's like, whoa, kind of crazy, eh? Now, second one, or third one. So remember the robot dog I showed you for $74,000 that he wouldn't sell to us years ago? That dog you see right, it looks like Rover and Spot. You can now buy one, almost the exact replica from a Chinese company for $2,700. You're now looking and have a pet that doesn't poop, doesn't eat. I know this would suck for some of us here who love show dogs, and Westminster just ended. By the way, who won Best in Show at Westminster? Anybody know? The Pekingese. Pekingese did, yes, awesome. See, that is awesome. It just happened this weekend, and we all know. That's fabulous. But if you go through this, robot dog can be yours for $2,700. I love this for the kids because my kids don't want to clean up poop. They want a dog, and they don't want to feed it. All you got to feed it is electricity. It's like a Roomba running around, right? If it can clean, sweep, and help with chores, I'm in. Last one as well. Computer can now predict our preferences directly from our brain. So here's the picture. There's a gentleman sitting in a skull cap at a computer. And the funny thing is, it says this was the caption. Now there's way more than this, but you're actually able to predict our preferences before we can say them or think them out loud to very high accuracy with what we're seeing about brain technology. So this is both frightening and interesting. Taking away our agency, choosing things that we were going to choose anyway that we didn't know. So think about this. There's a lot happening. There's more. This is every day. This is just like 1 or 2 days of the last 6 months. So if you want to look for hope, look toward these kind of discoveries that are occurring. Now, there's some downsides too. Technology is not all about curing everything. It's also about what do we need to be aware of. The biggest thing we need to be aware of and careful of is artificial intelligence taking away our ability to make decisions and deciding that we're carbon-based life forms that are irrational. They shouldn't exist. So at any rate, that's some of the fun stuff. There's not a computer that will actually move the slides forward or play music to keep me from talking more, so that's cool. But a couple of things that we covered today. So one thing I want to say just in ending, the team here is great. So I started years ago with myself and Craig, you met before. We had maybe Anita, but really what I've developed here is a team of people who are really here, in my personal opinion. They win the awards. They help you guys win the awards that you'll see on the thing. Everything Peter talked about before is yours. You should celebrate that. When you get listed in Barron's at the top 1,200, it's not me, it's you. It's not anyone up here. It's all of us together. That's all that happens. I call it teamwork, and I think that's extremely important. I think Keith maybe actually had said one time, hey, can we have the traveling trophy? Or maybe with Steve, you said, can we each get the traveling trophy for a week? I go, well, I don't think there's a trophy, but if we did, the answer is sure. You guys can pass it all around and keep the trophies. But as you go through, the cool thing about it is we just want to be #1 in your eyes every time we can. So what we do is we ask you questions. Please keep giving us feedback, books you read, things you want to hear about. It's what we want to present to you because we can't present it all in a format like this, but we're going to record a lot of this stuff so that you can get it in different formats. We'll write it out. We'll do it on our webinars as well. But we want to present to you what you want to hear. We want to provide you what you want to hear as well. And I know you don't want to hear the mower, but it's over there, and I can hear it coming this way. I see you looking at it. It's kind of fun. But before I actually end, is there any questions? Anything that you have? Any questions you'd like to have? Any questions you'd like to ask any of us here? Please keep.
If two chickens get really, really angry with each other, how language?
Two chickens get really, really angry with each other. Do they use foul language? Damn it, I think so. Okay, well, here, before I go through, I'm going to end on another joke, because I love these jokes. These dad jokes are super, super fun. If a child refuses to sleep during nap time, are they resisting arrest? So with all the unrest we have going on right now, I guess that's pretty appropriate. So children are in trouble for resisting arrest. But no, the beautiful thing about what we've done here, hopefully, is just giving you some topics that you enjoy. Any other questions before I let you all go as well? Please, yes.
Electric vehicles with batteries versus fuel cell technology.
Yeah. So electric vehicles versus fuel cell. So here's a good question. We've studied this technology for a long time. The most efficient, the least pollutive is fuel cell technology, right? You all know that once they adopt a certain realm, though, like electrical vehicles, or everybody's got one coming out, right? Some companies are even in 10 years going to all electric. Fuel cells are a better environmentally friendly all around item, but they're not predominant. Right now, people have pushed into electric. So just like Excel versus Lotus Notes years ago, Lotus Notes was actually a better program, but Microsoft and Excel won. It's the same thing going on with the technology. Here's the beautiful thing. You've seen 25 car companies, electric car companies come up. It's amazing to see. There's cool vehicles out there as well. Plug-in is not super efficient. What they're trying to do now is make the batteries more efficient and help them run longer. Because 260 miles for a lot of us that are traveling isn't real super convenient, right? You got to stop and charge, you can't find out where. In Iowa, I don't think they have electricity yet. I say that because I'm from there. Nebraska, they definitely don't, because they're our rival. But as you go through, these are technologies. The competing technology, there's a great thing called heliogen I told you about before. It basically takes water, H2O, it gives us hydrogen, and the output is water. It's oxygen. So you take water, and it becomes hydrogen and oxygen, super clean fuel, and things we breathe. So there's no downside to it. But heliogen is not the preponderant choice right now for people making new energy. So the key is it has to get our desire, it has to get money, and it has to get built. So if I can rebuild a plant over here that's natural gas with heliogen or with nuclear is becoming cleaner, lower energy. We're approaching cold fusion, we believe as well. The beautiful thing about artificial intelligence, and I didn't show you this, is artificial intelligence is getting us closer to cold fusion. What's cold fusion? Basically, nuclear fusion is a nuclear plant, and you have to contain it. There's all these, explosions. It can melt down, what you heard about 3 Mile Island in Kiev. Well, cold fusion is the same technology, but on a different side, it's very controllable. It's done at a very low temperature, but now they're finding it closer to room temperature. Anyway, the whole point is I'm a geek chemist, so I apologize for that. But as you get through it, there's a lot of energy sources. We look to the time when the energy becomes ubiquitous from all sorts of different sources, from solar, from wind, from gas, from geothermal. All this together is going to make energy very, very inexpensive. What happens when you don't have global wars over energy? Because solar is so strong. And if you look at this right now, what does the desert have on a constant basis that we don't have in Wisconsin? Sun and heat, right? So if we can somebody just put all those there where people don't go and ship the energy here, industrial battery storage is one of the #1 technologies that will help us with renewable energies. Windmills aren't the answer. I read a whole bunch about windmills this week driving through Iowa, and that's what there is to do when you're driving through Iowa in an RV, and also Indiana, and they're not very efficient. So why do we build all these? Because they're required to have efficiency by alternative energies by a certain time frame, and the other ones aren't there yet. That's what somebody told me. We were reading this. Now, we read it on the internet, so it's got to be true. But it's really interesting as we go through. Great question, though. I think there's a ton of competing technologies. Some are much better, but they just may not be what. I don't know what it is for development of a car to reality from design, but I think it's like 5 to 7 years. I think electricity was their idea back then. But there are some fuel cell cars that are coming from Germany and others that if you can see them, they are fantastic. Really fantastic. Came from a long time. Great question. Any other questions? Who here would like to lead? Yeah, I'm just kidding. We want to thank you. So what we talked about today is inflation, markets, rebalancing, some of the great planning ideas from Ken as well. Whether our wholesaler and our investment committee talked about by Mike, but I really want to say giving a hand to Peter our entire team, Peter, Ashley, we can see who's still here, Angie, Kristen, you're also gonna see Ryan, Jen, Ashley. I just want to give them all a hand if they made this experience phenomenal. And most importantly, on a day-to-day basis, they have to put up with me and my craziness. But the cool thing about it is I'm actually able to discern the things now that are most important and get to go to see them, talk to them, learn them, bring them back to me in an important format. So thank you all tremendously for allowing that. We want to continue to create the experience and make it even better for you as we go forward. But they are really who's doing it. I want to make sure that you guys understand that. I got full faith and confidence. So these are 12 people. If you have any questions, I trust them. I transfer my trust to them when they walk in the door. So if you have any questions to the 12 here, feel free. Ask them. Now we're going to do something a little bit different today. My daughter is actually at a golf meet I was supposed to be at this morning, which I didn't really know I was. But I'm going to go see the last few holes of her over at Curry. But what I wanted to do is offer for those who haven't seen the new building at the school yet, that Ken built with his bare hands. Zach pitched in a little bit. Peter had the design work, but anyway, almost did. But we're going to offer for anybody who wants to come by the school building, feel free to do so just afterward. So the whole team will be there to be able to kind of usher you through and see it, and see the outside. It'll be nicer because I won't be there. Just kidding. But you'll be able to see it if you'd like to as well. So we want to share that piece with you and where we're going to be meeting on a go-forward basis. As we go through this, continue for you. Thank you for your time. Thanks for coming out. We really appreciate that. We love to plan it, live it, and give it in the stages that you're in. Most importantly, I think as Ken said before, I think it's the best. Seeing you again, being able to talk again, being able to hug again, being able to see this is what's important to us. So if we can in any way help you live your life, we understand that we're just simply at the low end of the totem pole for you guys to say, to help you guys do what you think that is most important to you. Grandkids, travel, giving to the world, charities, each other, health. We want to offer that to you, but we want to see if we can help you with some of those things as well. So thank you for sharing with us. We want to thank you for being clients of ours. We really do. We want to thank you for, most importantly, being our friends and relationships we have. And we really look forward to a go-forward basis. And we look forward to doing forums in person and inside on a go-forward basis. So thank you guys. Have a wonderful rest of the day.